Hi everyone, welcome to the Fund Expert Talk. I'm Mbayi, Head of Banking and Finance of the Luxembourg law firm Praxio. And for this episode, I have the pleasure to welcome Jeremy Cross. Hi Jeremy.
Hello, Michael. How are you?
I'm doing great, thank you. What
Good.
about you?
Good. Doing well. Busy as always, which we'll probably talk about in a minute. And yeah, very nice to see you and to be invited onto this podcast. So thank you very much. I look.
This is our pleasure, Jeremy. Maybe for to kick off, you can further introduce yourself, your firm, and your role at the firm as well.
Sure. So I am the head of fund finance at Addleshaw Goddard LLP. Addleshaw Goddard is a European and Asian and UK-based firm, basically a general service firm. I joined the fund finance practice here to work with my partner Angus Gill around 4 or 5 years ago, and it has built up very nicely. It's a great firm, and it's great to be part of it. And the firm is doing well, and we are doing well, and we don't get complacent. We hope we will continue to do well. So that's a very brief introduction.
Well, thank you. So you've been in the fund finance industry since its inception, actually. Can you maybe tell us more why you entered into fund finance, how it happened at the time, and what drew you into that industry?
Sure. So you're right. I've been doing fund finance since around 2003, and I don't know whether that's when it really started. I think if you go back, people will have said it started a few years earlier than that, particularly in the US. But in Europe, probably I was part of the first set of people who properly did fund finance, as witnessed by my greying hair. So I started at S.J. Berwin, as it then was, in 2003. And S.J. Berwin, I joined S.J. Berwin in the finance team actually to do leverage finance and real estate finance, so mostly on the lending side. When I got there, I was made aware that there was a significant funds formation practice, and that we also had connections with the then providers of fund finance, which weren't that many actually, but one or two of them we still have in the market today. So Royal Bank of Scotland, Lloyds, etc. So we had good connections with those banks generally, and out of the combination of the fund formation team, and the fund finance connections, we had all the finance connections. We started doing a lot of fund finance at the time, kind of on the side of the desk alongside, the leverage and the real estate and everything else. So that's how I got into it. I realized it was a fairly new field. It was at the time not a full-time occupation. It was a sort of part-time thing. To some extent, everybody was learning as they went along. So I started doing it then, did a load of subscription finance, some NAV finance, some manager GP finance, and it's just gone on from there. And over the last few years, obviously, I've got more and more into fund finance. Fund finance has expanded, and now here I am and many other lawyers who are fund finance focused rather than and to the exclusion of other parts of the finance industry.
Yeah, you are totally right. So during the last 20 years, we have seen the industry evolve tremendously. And yes, this from being like a niche practice to having properly dedicated fund finance team.
Yeah.
So from your side, how have you seen this evolution during those 20 years, and also the evolution of the role of lawyers in the industry?
I think it's evolved almost to a point where, to use an English expression, it's kind of night and day different from where it was 20 years ago. So 20 years ago, you had the fundamental building blocks of what is still fund finance. So there was subscription financing, there was NAV financing, there were GP manager financings, etc. Not to the scale we have now at all, but you had the building blocks of it. But I would say over the past 20 years, and particularly over the last probably 10 years, actually, it's grown from effectively a niche industry, which a few lawyers and probably a few banks and lenders, maybe alternative lenders, are involved in, and maybe a few funds take advantage of it or or quite a few, to an industry where it's now part of the overall finance market everywhere, where the techniques and the tools and the various, including capital markets and all those tools, are now part of the fund finance scene, as it were. So it's grown from a niche product, if I'm summing it up, to a general finance product, which is beginning to rank just alongside other finance products as just another form of finance, which can be leveraged, can be put into the capital markets, etc., etc.
Mm-hmm. I'm also curious to know if there were any mentors in your career.
There were, and like many people, I suspect that it was somebody that I worked with actually when I started my career. So in around the same time, or even before I started fund finance, because sadly for me, I started my career even before 2003. So even before that, I worked in a different firm, and I had a boss who was, I think, the most hardworking person I've ever met. He led the finance team at that firm. He was always there. This was pre-internet, basically. So you had to be in the office. You couldn't be anywhere else. He would, I remember, work through almost anything. So I remember seeing him there a couple of times in a coat because he had flu or something. I'm not suggesting this is a massively good role model for everybody, but it kind of worked for me. He was on top of everything. He was a charismatic type of guy. He was the person that all the clients went to and depended on. And he hadn't, by the way, been to university. So he hadn't actually gone through the sort of course that I and many of us now go through, which is getting a degree and then going into law. He'd actually worked his way up from, at the time, what was a sort of a 5-year apprenticeship in law, and then got to the top of the profession. So I have always regarded him as a mentor and somebody that I would ideally, and sadly can't, but ideally would like to emulate.
In terms of advices that you can give to the next generation of fund finance lawyers, what could you give?
I always hesitate to give advice because it always sounds like it's an old person giving younger people advice. But here's what I've learned, I think, and tried to follow is always be curious. So when you see things that you don't understand, and you will, find out about them, ask people about them. People are always willing to help you out, I find. Be willing to learn. So always be aware that you may not know everything and there are other things that you need to know, and things change all the time. So you always need to keep up with with what's going on in your industry, also in related industries, because fund finance, as I mentioned, is an industry that's expanded massively. So probably 10 years ago, if you were a fund finance lawyer, you wouldn't really need to know anything about, say, securitization or capital markets, really. Now you do. You don't need to be the expert, but you need to know how they work roughly, and you always need to know where to find the expert. So just be adaptable, basically. Keep your eye on the industry, which changes all the time and has changed, as I said, from 20 years ago. It's completely and utterly a different industry. One final bugbear of mine is try not to say too much that something is market, at least without knowing why it's market and why it works. Just something that I always find is lawyers tend to say, there is nothing much that is market, and if it is, there should be a good reason for it, and you should know what it is. So those are a few pointers to the extent that anybody wants to listen to them.
Yes, I agree with one regarding market practice, because indeed, as you also mentioned, so fund finance is a financial relating to funds. Its fund structure is different, so you have particularities. So it's difficult to rely on a biblical reality of the market to impose views and ways.
Yeah, exactly.
In terms of current market trends, what are the trends that you are currently seeing?
I think it's mostly driven at the moment by 2 or 3 things. First of all, there's a demand for finance, or for funds to take finance, probably to a much greater extent and for different things than there has been before. So there's been, as we all know, a general slowing down of the ability to raise funds, at least in
Mhm.
certain parts of the market. There's also been a slowing down in the ability to make realizations, at least quickly or in the times that ideally investors, particularly private equity investors, would like. So I think those two factors in themselves have driven a huge amount of demand for finance that addresses those issues, and the market has stepped up. So along with those, you've got the ratings agencies coming in and providing ratings for funds. You've therefore introduced a whole load of capital markets instruments to funds and fund finance. So that can mean a lot of more sophisticated financing on the fund side. And you've also got the LMA coming in and standardizing and dealing very effectively and in a great way with subscription finance in particular, starting to get the product known in the wider finance market and generally. So what you've got is a whole load of supply that has become larger and more sophisticated, and demand that I think is only going to continue and grow. And I think that has meant a big increase in the number of people providing fund finance, a large increase in the way it's used. On the downside, and something people to be a little bit careful of, I think, is how much is the risk of certain types of fund finance still reflected in the risk of the interest that people can charge, etc. Because I think there is a danger, as always in a market like this, that there's a bit of over exuberance and people start to price at levels that don't justify the risk, or maybe people don't fully appreciate what the risk is. So I think there's a general trend, upwards and for fund finance anyway. But I guess with a couple of, as is every growing market, a couple of maybe increased risks as well.
And how do you see the interaction between banks and alternative lenders in the market?
I think it's very interesting, actually, because originally alternative lenders came in as an alternative to banks. So banks were drawing back from some of their lending activities due to the financial crisis and other things, balance sheet issues, etc. And alternative lenders came in and to some extent filled that gap. But I think it's a competitive type of situation, but also I think actually it's very good for the market and probably for both sides generally, actually, because banks can do certain things and a lot of things very well. They can't do everything. They can't meet all the demands of the current fund finance market. Alternative lenders are in a very good position to do that. So to develop the products and to maybe offer some other products or some variations on products which make the market stronger and make the general accessibility of finance better for everybody. And also, if you look at behind the scenes, as it were, you see a lot of alternative lenders and others in the capital market space actually helping to fund behind the scenes portfolios that are maybe fronted by banks. So there is an element of competition, obviously, but I think also it's good for the market. It develops it and it provides a significant addition to the firepower that's available in the market to produce fund finance and general finance products.
And how do you see the market evolving for the next 5 years?
I think that if the last 5 years are anything to go by, and you should always have the investor's warning at this point, which is that the past is not necessarily a great guide to the future, but from everything I can see, the market will continue to evolve. I think the products will continue to evolve. The involvement of the capital markets will continue. I think people will, in 5 years' time, possibly be ceasing to talk about fund finance as if it's a niche product and a special area, because, as I said before, I think most of the concepts that you would see in any other type of finance, so, real estate or leverage or whatever, are now becoming quite firmly entrenched in our industry as well. So So I see the market evolving. I would be foolish to say exactly how, but I see it growing. I see there being more need for, structuring and people thinking a little bit outside the box. And I can see more and more people coming into it if they're not in it already. And that means, lawyers can win every time, as everybody says, but that means more demand for lawyers, probably more demand for people on the finance side of this industry, either in the funds or in the banks or in the alternative lenders or wherever. So I'm very optimistic about this industry, and I think it's going to be very interesting times over the next few years.
Mm-hmm. In terms of deal complexity, are there deals for which you are really proud to have closed them, or which were quite complex and you found innovative solutions?
Yeah, there are. They're not all in fund finance. So if you want to cut this bit out that isn't, you're very welcome to, Michael. So two of the deals that from a number of years ago, one was doing a deal with two of the big football clubs in the UK, so Chelsea and Fulham football clubs, and trying to negotiate a ground share between the two of them for reasons which are kind of too complicated to explain. But that was a deal that had no precedent whatsoever. We had to start from scratch. We managed to get a solution that sorted out the problems for it. It took about a year, and that is probably one of my favorite ever deals, not least because I'm a massive football fan. So that was great. So there was that one. There was a deal I did was a joint venture years ago. Again, I worked at HSBC for a bit, and we did a joint venture with British Telecom and Panasonic and Sky to put set-top boxes onto TVs. Joint venture took 2 years to do, was very complicated. The technology kept moving while we were doing it. And I think that is probably one of the deals I look back on with most pride. But I'm conscious we're talking about fund finance, so I'll talk about a fund finance deal. I think the one I would like to highlight maybe is a manager finance deal that I did in around 2005. And it doesn't sound very complex now, and it sounds like everything is because people have done loads of them. But at the time, really nobody much had done any, and certainly no complicated manager deals. So we had to structure the whole thing again, pretty much making it up as we went along and working out how it all worked. And we put together this very, very good, I think, manager facility for a big fund. All went very well, and that is one of the I'm proud of many deals, but that's one I'm probably the most proud of, certainly in this space.
Thank you, Jeremy. In terms of misconception, are there any misconceptions about fund finance that you would like to dispel?
I would say, and I've already kind of said it, that one of the misconceptions is that fund finance is a peculiar product which is different from other types of finance. I think what fund finance actually is, particularly as the developments have shown over the last few years, it is just finance. The only thing you have to get your head around is that you are in effect somewhere in the middle of the structure, putting a fund in place rather than a corporation or another type of entity. And funds have their own structures and their own rules, and you have to be aware of those. But once you're aware of those, then a lot of what is going on in fund finance now is not substantively different from any other type of lending activity in the finance market overall. So I think that's my one takeaway. I'm sure I could think of others, but that's probably the main one.
Thank you. Thank you very much, Jeremy, for your time today. And thank you as well to the audience for your time, and see you soon for next Fund Expert Talk. Bye-bye. Cheers.
Bye-bye.